You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that music means it is time once again for the option block. Apologize for the late start here today, but as you can tell from my audio, I'm not here. I'm not in the studio in Chicago. No, I'm down here at the quite scenic and sunny, I should say, CBOE Risk Management Conference. It's been a few years since I've been down here. An interesting show, usually the home of the premium harvesting. I got a feeling this year's agenda going to be a little bit different, but I just rolled in, so I haven't had a chance to actually sit down and listen to the sessions yet. So hopefully maybe by our next show later this week, I'll have a better synopsis for what's been going on the sessions here, the cutting edge of volatility. But not to keep us waiting, let me introduce the rest of my cohorts. Got a bit of double duty going on here, which is kind of fun. Usually he's my cohort down here at the conference, but he's not down here. Today he is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program, sir.
It's great to be here. It's fun, and boy, we've had an exciting week, haven't we? It's when the VIX goes backward, it's saying, hey, we're going to move 2 to 3% on a daily basis, and guess what we've gotten? 2 to 3% daily moves. The Apple in particular has been absolutely bananas, and that's just been kind of a symptom of what we've seen out of the whole market. I think that one of the things I always say is when you have VIX futures go backward, it tells you that the market is no longer logical, and I think the last week of trading has proven that. And we can continue to expect more of that. My gut tells me that the VIX may have topped out. I don't know that we're going to actually touch 50. We got to 49.5. But I do think that we're going to continue to see vol move in the 30s and the 40s, high 20s for a minimum a few days. And I would not be surprised by 75-point days. In fact, I'd be surprised by 7.5-point days in the S&P 500 here.
Yeah, it's funny. Just on our last show on Volatility Views, I think it was on Friday, Andrew pointed out that this VIX is pricing at about a 3% move per day, and a listener chimed in and said that would be crazy, and we said no, that's actually what we're seeing right now. That's not crazy at all, and so that's exactly what we're seeing right now. Speaking of Andrew,
what we're seeing.
Speaking of Andrew, we have rare double duty from the other side of the option pit seat, the other coast, Mr. The Rock Lobster himself. Mr. G, are you there, sir? Can you hear me?
I am. As long as you can hear me, I think I'm okay. So, I's here.
All right, and last but not least, holding down the hot seat there in the Weather Shield capital of St. Charles, Mr. Uncle Mike TOSAW from St. Charles Wealth Advisors. Uncle Mike, are you there as well, sir? Do we have a rare quad appearance on the program?
We have such an appearance, just overlooking a beautiful sunny day out here on Main Street in St. Charles, out my office window, and excited to be here as always.
All right, with the
you would almost say that we're sweeping the clouds away today, wouldn't you?
Yeah, it's a rare time where I leave Chicago, and it's not too bad down here at the time that I leave coming down to Florida. But we need to keep on rolling. We're already running behind. It is time to head on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading, and there's quite a bit to get to here. Like I mentioned, I'm down here at the Risk Management Conference on a little bit different show, kind of running at you on the fly here with all people beaming in from hither and yon. As I'm coming into showtime now, we're seeing, it was a little dicey at the start of the day. People thought, there was news of a new outbreaks, the first deaths here in the U.S. A lot of people thought that was going to weigh on the market, and it did for a brief period, but now apparently cooler, calmer, saner heads are prevailing because most of the major indices are full on in the green. S&P up about 2.5%, NASDAQ at about a similar percent, about 2.5%, and the Dow rarely leading the charge to the upside, up about 2.8%. Of course, all that means our friends in the vol space taking a bit of a break. VIX cash obviously still elevated, but at about a 33.5 coming into showtime. That puts it not that far from where it was at the end of our last show. That puts it up about almost 2.5 handles from where it was this time last show. But as Mr. Meatball alluded to, a far cry from the nearly 50 that it was going into vol views. Our old friend VVIX, aka the volatility of volatility, still going to be high, obviously still frothy, up to about 117. That puts it up about 3 handles from where we were the last time we all checked in with each other. And our old friend VXX, the product most of you like to fade, not so much this week, at about a little bit north of 22, about 22.15. That puts it up a little over a handle from where it was this time last show. All right, Mr. Meatball, since you're joining us, a rare double appearance, let's start there before you have to head off to Carmen Line land, sir. What is lighting up your tape in this craziest of starts to a crazy week?
I mean, how about everything going on with the VIX and with Apple and with really anything? Today is a day where, it looks like it's primarily algo driven, but they're buying everything. And what's kind of fun is that the VIX is 33. Vol futures are not doing very much at all. They're basically sitting there. And that's because of backwardation, right? Despite the giant 6-point drop, 15% if you're Mark Longo, drop in VIX. VIX futures are actually pretty much unchanged, and that's because we are still heavily backward. There's still hedging activities going on. There's still all kinds of pricing, but we've got. You see the S&P up 2.5%, $75. You should expect to see vol stay firm. Apple, in particular, is up 6% as I'm talking to you. Boeing's up 5%. Amazon is up. Amazon's up about 2%. Microsoft, another one of our famed MAGA stocks, is up 3.5%. And then finally, Google, which has its own. Is up kind of the small one. So the heavy market cap names got kind of punched in the head. That would be that'd be what I'm seeing.
Yeah, Apple's certainly feeling the love up there today. Up, like you said, over 6%, nearly 17 handles, up to a 290 right now. So apparently all the concerns about production slowdowns and indeed demand slowdowns from the infected parts of the world, apparently at least for today, are back in the rear view mirror. Since it is a super green day, we got to bring in our resident bull, our diehard optimist, Mr. Uncle Mike himself. Mr. Uncle Mike, this certainly might qualify if it weren't for the fact that we just sold off about over 10% last week. Today would certainly qualify in and of itself as an Uncle Mike type of day, but you probably might still be a little cautious. I'm curious. I'm sure a lot of our listeners want to know what is the perma bull up to? What are you thinking about these levels? Are you reassured? Are you starting to dip back in? You still in cash? What is the perma bull up to these days?
I can't say that I'm reassured as of yet. I mean, with for the 3 sections or the 3 styles of money with which I manage, buy and hold, which I did nothing to from the get go and have done nothing. With my risk reversal / collar style strategies, I'm still in cash on those just because of the fact that the market went down when I had already gotten out of the short put on the risk reversals. So not looking to get back in as of yet, but I might be getting into that at some stage in the near future. And the aggressive trading, my rules dictate that I have to have little, if any, money in the markets when markets are negative on the year, and so that's still the case. So I'm kind of just sitting here watching and twiddling my thumbs and doing what I can, but for the most part, I'm sticking with my rules, and I think there's a lot to be said for sticking to your rules, because when markets are negative, my aggressive trading strategy needs to be in cash, and that's still where it's at right now.
So,
yeah, Mike, I don't think that's a bad rule. I'm a big... it can be so tempting to want to buy the dip. I think that there's always opportunities. And if you have a ton of cash sitting on the sideline and you have some names that you absolutely are dying to get into, you could make an argument that Apple on Friday, when it got down to $258 was, an opportunity for somebody to jump in. But unless you have some real access to grind, we're down on the year. We're not just down on the year. I mean, as of Friday, we were down. We were below the year high from the year before. There is all kinds of kind of ugliness abounding, and I don't really. I think that you're right. Like, have some systems in place, have some ideas. For those of you who are like, hey, out there that say, hey, I have a ton of money on the sideline, I want to put something to work. You know what? That's not a terrible idea, but that doesn't mean you go hog wild. Some dedicated and some smart trading, as a trade makes some sense. I don't think going all in, both hands pointing towards you to buy this market makes sense in any way, shape, or form. Because as much as, and I'll let you guys kind of debate this, but I think as much as this is a coronavirus sell-off, it's also a market got way ahead of itself, not a hell of itself, excuse my French, ahead of itself type of sell-off, in that, we had 5 companies that were 20% of the S&P 500 and 5 companies that were 45% of the NASDAQ 100, and those are the names that, lo and behold, got punched in the face. But yeah, I mean, if you're a stock picker and you have some real names that you like, dipping your toe in a tiny bit isn't a terrible idea, but I'm with Mike. Stick to your systems.
Certainly hard to argue against being systematic in a market that is anything but these days. And speaking of anything but systematic, he's the Rock Lobster. I'm just kidding, of course. But I'm curious, Mr. Rock Lobster, this is, if ever there was a time to be in a VALE trading club, this would certainly be the one. I mean, the cool hats, the secret handshakes aside, I got to imagine these are hot times for you guys. So what are you and the crazies, the VALE crazies, what are you guys up to in the pit chat these days, or I should say the VALE trading club these days? And what else is catching your eye out there in this most turbulent of markets, sir?
Well, I think what's catching our eye is mostly just being long the backwardation trades, like VIX call flies, call spreads, stuff like that that's in the money. And when I say in the money, it's because the futures are trading like, 27-ish? I got to look at the last print. So 26.15, I think they did trade a high. Maybe Friday was the high. I'm still trying to figure out the high tick for the March, but it was like trading up around 29, almost 30, I think, overnight. So pretty high for the front month future. So that future number is $8 below. So there's like lots of trades where you kind of have this in the money where, we only have now expiration is the 18th. That's 16 days away. You had almost $8 of backwardation. So I mean, if we keep kind of having this now at sort of the 2% per day routine, these vol futures these March futures are still going to pull up. So there is a lot of movement in there. So if you're in the VALE trading club, that's what you're doing. You're looking at trades like that and then trying to be long on the other side. We had like a realized vol trade for Friday, which was looking pretty decent on Friday. It was a good chance to exit some. And as far as today, most of Friday, we closed some long vol, and now we're sort of sitting on sort of the back end of most of the trades, meaning, we're long some index, long some vol puts and some VIX puts. And now I'm just kind of waiting to see how long 35 vol lasts. One thing about, since we're in the kind of the danger zone, like once you drop below 24, this whole move from like 24 to 34 to 24, vol moves in pretty big chunks now. Like the fact that you could be below 30 tomorrow could be very easy. It could also, so the relative move, like 5-6 points for VIX, easy. Either way, like literally within maybe 2 to 3 hours at this point, because just the nature of how vol's working and the nature of volatility in the 30-day options in VIX. So things move faster. The backwardation is more, I would say, meaning the cash is over the futures, like Mark was saying. He's like, it's a goofy market. The market's unhinged. And it's going to stay that way until VIX starts to show things are settling down at some point, which it's not doing right now, by the way. It's still showing a lot of movement. So now what I'd like to see is, all right, well, we want to see that cash and future numbers start to get closer together again and see if it could stay that way for a day or two. And then that's when you start to see people starting to calm down a little bit. So right now, I think you're getting a pretty good brush off of volatility from the top, basically. Friday, it was like by midday, we had kind of a peak vol, except for all the overnight stuff. And now you're starting to see some of that vol come off. And just the fact that we're not trading below 2,900 anymore, means that vol was coming off, when everybody thought some sort of coordinated central bank stuff. And maybe they're waiting for the news. But tomorrow, it would not surprise me to see 3,100 SPX or 2,900 or below SPX, 2,850 something. So it's still in flux, but from a actual vol product point of view, things aren't moving, what I would say, in a crazy fashion. Like VXX is down 7 cents on the day, 7 cents, okay, with VIX down 6 points. So those vol futures aren't moving as much as VIX cash is moving. What's really moving is premium in the S&P 500. We had looked at some vol trades on Friday, like selling some put spreads in some names on Friday, but buying upside in VIX call spreads against it. And that ended up being, a fairly decent idea just because VIX futures haven't moved a lot, but we have had a huge rally. So, there's a lot of moving parts in the market that are interesting, maybe more than it would to cover in this show. But the cool part about VIX where it is the fact that so many of those call spreads are in the money. And if we kind of continue to have this good news, bad news, good news, bad news, the value of those call spreads slowly grow, and it makes a great hedge if you want to create some long positions and some other stuff by selling some put spreads and like more blue chip stuff, like GE stuff and Cisco's and all of those kind of, I would call, not like the MAGA stuff that just flies, but companies that probably got a little oversold because, we really don't know what's going on with earnings. But where VIX would make a good hedge for those. So that's the type of trade that I like. That's the stuff I have on. And we'll really see how much the market actually bounces. Like right now, it looks like, because I think what's the average bounce, sort of that bear market vicious rally? They're usually 5 to 7%, something like that. You could have those after you have those big sell-off days. And I have to say, today's looks a little light, although from the bottom, let's see, what was our low point in SPX? Maybe from the dead bottom, we're close to that number. Let's see what we have. And if I look at that, so we did get it. So from the dead bottom, SPY-wise, we had a low 285.54, dead low. So we're 15 points above that. So there you go. So we've had a 5% rally from the dead low on Friday already, as far as I can tell. We had a 285 low, and that's 15 points up. every 3 points is 1%, so that's 5%. So we've already had a pretty sizable rally from, I would call, the dead scaredy low on Friday, and we'll just see how far that goes. But would it surprise me if we got back to like a 310 this week? Sure, anything can happen. So any huge move, any of this stuff can happen. But I'm still look for those like relatively large moves, somewhere between 2 and 3% a day, until there's some sort of sense of what's going on with this virus.
I like that, the dead scaredy low. Good technical term for what we're seeing out here. Speaking of what we're seeing if you're a Robinhood user, you're seeing the exact opposite of the thing you want to see on a day like today, a day when the market's moving nearly 3%. They put out a tweet a little while before showtime saying, our system is experiencing downtime issues that are affecting all functionalities on our platform. They were aware of the issue and working to have all systems up. So effectively, they are completely down on a day when everything's up. And of course, all the naysayers in the space are now saying, "Look, see what happens when you do it for free. You get what you pay for." So a lot of the naysayers are coming out on this one. But of course, a day like today, you can't have a system outage. Of course, last week we saw some other ones, including our friends Fidelity and over there at TD. I think Schwab also had some issues during the big 800 plus sell-off day last week. So they're not alone, but I don't think anyone else had a massive system-wide outage like Robinhood. Mr. Rock Lobster, Mr. Uncle Mike, are you guys seeing this as well? And what are your crazies saying about this?
None of my crazies use Robinhood. So I all I can say is front ends go down all the time. And I think if you're a user, you probably should have two accounts. Just most of the pit crazies, I would say, have two accounts in different places. So, but I mean, Robinhood, I think they kind of they seem to have problems all the time. So from one part or another, and I think maybe it's just because they have such huge growth, right? So I think their biggest problem is just trying to manage the growth they have at this point. So I don't like when all those things go down like that. That's not good, but I think that's where they are right now anyway. So, and right now, like everybody's trying to get back in. Like you could feel the FOMO this morning. So I don't know what TOSAW has to say about that, but it was a little palpable, I would have to say. Oh my God, now we're finally rallying. Now it's all going to be good. And now things seem to be slowing down. So I heard there was concerted Fed action, but I don't know exactly what that means. I think the world would probably be better if it just decided, everybody don't fly on an airplane anywhere for 2 weeks. The Fed can extend some credit to the airlines for a while, and then see where everything is after 2 weeks, and kind of see where the virus is and try to stop it at its core. But that's probably a little draconian. But I think you'd get some answers pretty fast. But I don't see that coming out anytime soon.
Speaking of things coming up anytime soon, I've been traveling hither and yon, so I haven't had a chance to run our Eye of Sauron today. Mr. Rock Lobster, do you have any names, or should we just roll on into an extra Uncle Mike Palooza today for the strategy block? What are you feeling, sir?
I had a couple of things that might have had some interest, and I need to go back and take a look at where they were. Give me 2 seconds. So
sure. As you do that, we'll head on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
But we'll take what we can get here. All right, welcome to the Odd Block, the portion of the show where we get weird, we get wild. In this case, the Rock Lobster gets weird and wild. I honestly, listeners, have no idea what he's going to throw at us. So, Mr. Rock Lobster, I think you mentioned VALE before. So let's do a little check-in on our old friend VALE. It's been a little while since we've checked in on VALE. Of course, listeners, ticker symbol VALE. That's VALE. Also probably VALE for a lot of you Brazilian folks out there. This one has had an interesting, shall we say, run right now today at about 10.5. It's up about 60 cents over the course of the last year. It's kind of vacillated quite a bit. It was a little north of 12 a year ago. Got as high as looks like about nearly 14 back in July. Then it's kind of been sold off, and right now at about 10.5. Mr. Rock Lobster, what do you have in store for us on the on VALE or VALE, sir?
It appeared today, and it has like some pretty good size open interest. Weren't they the dam company? We'll call it the dam company that had a problem with the Brazilian dam. It appeared this morning, and I'm looking at the volume that somebody tried to purchase the 10.5, the March 20 10.5 for 37 cents. They're now trading about 43 cents. It looks like 18,000 went up. So it looked like a bid kind of taking the offer, sort of going through, and then the balance was filled. So as of right now, it just looks like somebody trying to, catch a bounce in that stock, as far as I could tell anyway. The stock was just in the 12s, and it traded as low as, the low 9s. So it does appear that, and let me see what the total volume is right now. So there's 18,000 of those calls trading, and the open interest is 276. So it would appear that somebody is looking for some kind of upside in here, and I think they might get it. So yeah, because it was definitely lifting the offer early, and then the rest of the volume printed. I don't know how far, but right now it looks like they're right 16,000 times for a nickel as of right now. So that would be the VALE trade for you right now. And second is a stock that I follow, TEVA, which is a generic drug maker, which is it used to be at a $70 or $80 stock. It's down to 11.5. It was 6 this fall when all of the opioid, I think they were trying to get in part of the opioid settlement happening. And as of right now, what's going on? So I see like a pretty sizable volume. The APE 10s went up for 62 cents, April 10 puts, and the open interest on them is over 100,000. So this is not a small print here, or it's not small open interest, 107,000. So I am not sure, because I did look at this volume earlier, and I thought at the time it was kind of a line in the sand put, and it appears they're either buying them back or rolling them up. I don't quite remember the original price for around the 100,000 open interest, but it does appear that they're starting to buy these puts back, and then I'm not exactly sure, but then selling the 12 puts. So I don't know if this is new paper or opening paper, but it appears that the 10s were rolled to the 12s. At least that was the chunk of the spread. And there is 100,000 open on that strike. So the paper still looks, the spread roll is mildly bullish. And there's still 100,000 of these puts left open. And I believe it was a seller at the beginning. So, I mean, I had kind of a busy day overall, but that's sort of what I'm looking at right now. Those are the things I'm seeing. Those are at least two things in a fairly busy day that looked that were kind of standout just because it was a big chunky volume relative to the underlying. Mr. TOSAW, you ready for the strategy block, sir?
The strategy block.
I am. Can everybody hear me? I cannot hear Mr. Longo. Am I being heard?
I think Mr. Longo, as he usually does when he's in Florida, is drinking a cool, frosty beverage. But I have a feeling you can regale us with something, some sort of strategery going on with this crazy market up, down 3-4%. As Mark would say, what does he say? Cats and dogs falling out of the sky, mayhem everywhere. What do you have to help our listeners with their strategery in a volatile market like this, Mr. TOSAW?
Well, before we do that, we got to do a couple things here now that Longo can't talk. You know what he really does, Andrew? He trades stupids all the time. He'll buy a call at the money call, and then he'll also buy another call out of the money as well. Same expiration on top of it.
What else can we? And you know what? He only drinks drinks that have at least 2 umbrellas in them. He does. When he goes there, he actually has to demand 2 umbrellas. He will not touch a drink unless it has 2 open umbrellas in it at the same time. I swear that's true. I swear it's true for sure.
Hey, and you know what else? His favorite Star Wars movie is Episode 1.
If that doesn't bring him in, I do not know what will, I have to say. There must be, I'll tell you, cats and dogs must be falling from the sky for him to basically throw Episode 1 down on his head, and he's nowhere to be seen. So with that, how about a little strategery for our minions that listen to us on a weekly basis? What do you have for them?
Absolutely. As much as I couldn't resist on saying those things about Mark. Well, he couldn't say anything back. But no, in markets like today, I think that there's a time to be in cash. And for me, that time is now for the aggressive trading of what I'm doing. I think that it's important to understand that cash is a position. And also to just requote what Mark quoted last week, if you choose not to decide, you still have made a choice. And it's from Rush, of course, the band. But Mark's absolutely right when saying that. And there are certain times that the market just doesn't match what you do. For me personally, now is that time. And for some longer term things, then I'll look to maybe if I have some stuff on the sidelines, now's a good time to get into a few things and do a few things. But the reality is that for short-term trading, this just doesn't match what I do. So cash is a position. Now, if you are looking to get back into some things or looking to do a few things, I'll go through the 3 sections or the 3 basic strategies that I'll use. For buy and hold, I think now's a phenomenal time if you had money on the sidelines and you need to get some more exposure in the buy and hold section of your portfolio. Now's a phenomenal time to do that just because of the fact that we're roughly 10% off the all-time highs. And so we've had a near 10% pullback in the marketplace, depending on what the market's quoted at right this very second, who knows. And when you can have that type of an opportunity, that's huge because of the fact that if you can wait out a little bit more of a downturn, you really did buy the dip and you bought a very good time, honestly, even if it does come down a little bit more. Now, the other side to this is that let's say you're looking to use something in the hedged section of your portfolio. For example, you want to trade a collar. You want to perhaps use a risk reversal. Those are probably 2 of my main go-tos for the hedged section of my money management. Well, with those, I think you need to be a little bit more careful from the standpoint that is now the time to limit upside. So, for example, let's say that you're looking to do a traditional collar, buy XYZ stock at 50, buy the 45 put, sell the 55 covered call against it. Do you really want to be limiting upside? And I would tend to say no, personally. I am looking to perhaps get into a risk reversal, but with the risk reversal that I'm getting into, I'm justifying getting into it because we're at similar levels to where we were when I got into it in the first place. And when I got into it in the first place, we already made some money on it. I got out of it last week just out of fear of downside. So I think that if you are looking to get into something that's along the lines of a hedged position, such as a collar with maybe a long call kicker to it, risk reversal, something along those lines. It might not be a bad thing to do, but just have a plan in case this market does continue to go down even further. Now, the final part of this, if you're a short-term trader, for me personally, I like sustained, easy upward movement. That's kind of the best way with which I make money. And the S&P 500 has done that over the course of the last 100 years. And I bank on that 100-year track record for what I do with my option trading. However, there's times where it doesn't do that. It didn't do that last week. And so when you're in those types of times, recognizing when those times are coming and getting out very quickly is something that's very important. Now, one of the things that I'll do when I'm trading in the short term is that I'm typically early, meaning I will get out early before bad things happen a lot of times, not every time, but a lot of times. But on the flip side, I'll get out early before extended good things happen. And so the trick is, my opinion, the trick to this is that you need to be consistent and know where your faults are as a trader or where your blocks are as a trader. So in other words, if you're expecting to buy every dip and make money or buy every bottom and sell every top, you're living in a dream world. As awesome as that is, I mean, very seldom have I ever bought the exact bottom or sold the exact top in the 15 years I've been doing this crazy stuff. And I'm sure Andrew doesn't have a lot of exact bottoms and exact tops or Mark either. So just have an understanding of where you are with things. So when doing this, my recommendation for where we want to go with this is going to be along the lines of understand where your limitations are as a trader. And because I'm early all the time, typically with my trading, I know that these type of environments for aggressive short-term trading just don't fit with what I do. And if I have to wait another few weeks or a few months to dip my toe back in the water, I'm fine with that, because I know that ultimately I don't feel I can have success in this style of a market with the aggressive trading. Now, my hard and fast rule is that I might put a little bit of money into the marketplace, but ultimately it's going to be something very, very simple and basic. I'll be a believer in this market when it can go positive on the year. If the market's not strong enough to be positive on the year, then it's not a strong market to me, and it's not a market that I really want to be a part of. So that is my 2 cents with strategy for the day today. And if Mark's available, if Mark's still speaking to me, I'll give it back to Mr. Longo.
Well, I did come back only because you said the magic words, which is, I think Mark is 100% right. I believe you said earlier in your strategy block. So those are words I think we can all embrace and all live by as we keep on rolling a little mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, a lot of questions going on out there. As you might imagine, it's a question-heavy environment out there right now. In fact, we were talking about some stuff ahead of the show as well. I don't know, Uncle Mike, did you want to talk about it here, or do you want to save it maybe for another show? You were talking about maybe SPX and SPY and some of the nuances there, or do you want to save it for another time?
We can go over it now because I'm not seeing a dividend or anything on this, so I am still baffled right now as to why the difference exists.
Okay, why don't you regale our listeners with what your question was then?
Okay, so I'm looking at this morning, and in looking at it, let me bring this up right now. Typically, when the S&P 500 is up, or the SPX is up 10 points, SPY is up $1, give or take maybe a couple of pennies. And it's usually a 10-to-1 relationship. But today, it's the SPX is up a little bit more than what SPY is. This is my delayed screen, but the SPX is up 55, SPY is only up $4.60. And so we don't have any dividends or we don't have anything going on that I'm aware of. I may have missed the memo in some way, shape, or form, but just the relationship is a little bit off today. And so when I've called people on the trade desk, the best that they could give me is that it's just the current circumstances of the market. So do we got some crazy weird ARBs going on, or what's happening here?
The nuances between SPX and SPY. They're legion there. Man, you hit on one of the key ones right there, of course, which is the dividend. We are kind of post-SPY dividend, which is usually the time, at least, obviously SPY dividend is quarterly, so it'll come up again, but it's usually the time when we start to see the more crazy divergences pop up. Look at our Volatility Views program listeners if you have questions about that, and even some of the interesting nuances between spikes, which is derived from SPY, and versus VIX, which is derived from SPX around that dividend time. It gets pretty stark, pretty surprising differences. But I know, Mr. Rocklobster, before I go on, I know you and both you and the Meatball had some interesting thoughts along these lines. So, Mr. Rocklobster, Mr. Meatball had to run, so I'll let you share them. But what are your thoughts here for Uncle Mike, sir?
Originally, my first thing was dividend, but you're right. It's too early in the cycle. I mean, this is the March dividend cycle, but I don't think that's it. All I know is there was a jam into the close Friday, jam higher, especially after hours. And I don't know if somehow that messed around with the way the SPX settled, how the components settled. So I have to be honest, this is actually, it's a little head scratchy to me why we're, 25 basis points off or something like that. My only thought is just strange Friday settlement, just because they did jam the closing prices up very high on Friday. I know that. So I'm not totally sure why that is. Maybe we'll get some listeners will write in or something like that. But I do find it odd. Although it is tracking today the right way, it's still got that closing differential, but I assume that will be gone by tomorrow. But I think in my mind, it must have been just a vagary of the close on Friday. That's the only thing that explains it to me at this point.
Yeah, I'm not as concerned or alarmed on a small basis point differential on a day like today, coming on the heels of last week, right? Where we're seeing so many huge moves. We're seeing fast markets, wide markets across the board, crazy opening and closing quotes, as you were saying, Mr. Rocklobster. We saw last week even, I believe it was, I think it was MIAX and a few others reporting issues with OCC having to be able to handle some of the closing, which we don't really see hardly ever. So these are somewhat outlier time, not even somewhat, very much outlier time. So, Uncle Mike, I wouldn't be too alarmed if we saw this on a quiet day when the S&P was up 0.5% or not even 0.25% and nothing else was going on, and we saw this kind of disassociation. I might be a little bit more alarmed or intrigued. I think we're just kind of in that weird market. And you're right, we're between dividends, so that's my usual go-to culprit for these sort of nuances. So it might be worth noting, maybe Uncle Mike, when we come back on our Thursday show, I would have to wager this will probably not be the case. I'm going out on a limb and say that because we know there can't be a huge arb between SPY and SPX, because otherwise, guess what? They'll arb it and it'll go away really quickly. That's one of the easier arbs to take away. So the fact that they haven't hit this one is a little bit weird. I think worthy of note. I appreciate you bringing that up. I want to keep going on this, but I also want to get some of our listeners in. They're gonna be mad, why are we answering Uncle Mike's questions? We have our own questions, so we'll keep going, Uncle Mike, before we monopolize the whole thing on him. This next one up. This guy's been waiting patiently. He wrote in a little while ago. This is OLADONEGRO. So something black. I don't know what Olado means in Spanish, but black something. Maybe his name is Olado. I don't know. But OLADONEGRO wants to know. Can you please tell me? This is interesting. This is kind of like the flip, Mr. Rocklobster, Mr. Uncle Mike. This is kind of the inverse of the usual question we get, is where I bought a call and the stock rallied and I lost money. Why did that happen? This is kind of the flip of that. He says, can you please tell me why Tesla put options for the 9/20 expiration back on February 21st? So he wrote this back in about a week ago. I apologize for the delay, Olado. We've been busy, as you might imagine. He said why the Tesla put options on the 9/20 expiration on February 21st, 9/20 strike expiring on February 21st, didn't increase the value as the stock plunged today at 11:20 a.m. Actually, they drop a little more as the stock was falling, only really start to, so maybe English second language here, only really start to increase in price after the stock broke the VWAP, which is the volume-weighted average price. Mr. Rocklobster, this is one, like I said, we get the call question all the time. In fact, I usually don't answer those as many anymore just because we had so many of those. We don't get to put one very often, let alone on Tesla. But I think this speaks to just how mad it's been in Tesla of late, sir. Where look at the short answer to this obviously is that this is the same deal as we talk about going into earnings and you buy a really expensive call and then the earnings happens and you lose money on your call even though it moved your way. This is the exact same thing on the put side. You obviously overpaid. You don't say what you paid here or how much the premium was or anything like that, but I think we can intuit from your question that you paid quite a bit, and you need a substantial move in the underlying to pay that off, listeners, and it doesn't sound like you got that. Mr. Rock Lobster, you want to add in anything here for Mr. OLADONEGRO, who unfortunately overpaid for some Tesla downside puts?
All I'm going to say is, considering that Tesla on Friday the 21st closed, I think it was right around 9:01, and they bought the 20 puts, and they're a day later, I think those puts are worth $100 at least. So, yeah, what happened was, they spent a lot of money on puts. Vol was very high. Tesla came down, and the volatility moved faster than Tesla was able to go down. And that's what it looks like. And then, of course, you traded 600 yesterday or Friday, 1 week later. So it's very hard to trade options without understanding how volatility works, which, of course, that's what Option Pit does. We teach people how volatility works. By the way, also, as we're speaking, VXX is up on the day, which means the vol futures are up on the day, which is not going to surprise me at this point. If that's for real, if that's a real tell, which generally it is, we could end up being red on the day, SPX. So I'm just curious to see if those futures hold that value. But as it stands for right now, you have to be vol sensitive when you buy an option like that. Because your time frame for exit, you can be right on direction, but your time frame for exit is very short. It's not long, it's short. Because the vol's so high, you have to take the money you can get and then just hit the road.
Yeah, you can't just buy options at any price and expect them to pay off, even if you are right in direction. You obviously were a little bit over-optimistic on the vol side. Anything to add, Mr. Uncle Mike, before we roll on into Around the Block, sir?
Andrew said it very well.
Uncle Mike agreeing with everybody, heaping the praise on all of us today. Wow, this is he obviously he's happy in a bull market, and hopefully you're happy, listeners. As we keep on rolling into our final segment, it is time to go around the block.
Around the block.
All right, everybody, welcome to Around the Block, the portion of the show where we break down what the heck we're watching for the rest of this week. And surprise, surprise, there are some things outside of how many coronavirus cases popped up today that to keep an eye on. Of course, everyone's kind of doing this Fed watch, which is one of the reasons why we're rallying today. People think maybe the Fed going to ride to the rescue. I don't know how many bullets they have left in the chamber to really do that, but that's why one of the reasons, at least, why the market is green today. Looking at the micro side for a little bit of a change of pace, we've got some decent names popping off this week. We got everyone's favorite name to watch and just kind of speculate on. This is Tilray after the bell today. Tomorrow got Target before the bell, as well as Kohl's. So if you like yourselves a little bit of a retail, tomorrow is the day. Nordstrom after the bell, Ross after the bell as well. On Wednesday, you got Zoom after the bell. Thursday, Sienna, Costco, Funko. If you like yourself a little bit of Funko Pops, we may have 1 or 2 or 100 in our studio. Then Funko's a fun one for you to watch, pun intended. So still are a bunch of names popping off this week as well. Dollar Tree on Wednesday as well for Uncle Mike. I know that's one of his favorites. So a lot of names to watch this week if you don't want to watch the coronavirus count. And while you're sitting in cash, trying to figure out where your next opportunity to jump in could be, this could be one of the ones for you. Of course, we still have all that broken down for you over there, theoptionsinsider.com. Earnings movies. Let's pull up one really quickly. Let's look at Target. They're popping off later this week. At the time of this report, they were trading 103 even, and they were pricing in about, looks like $6.51, and that's actually a little bit light. In the past, they've actually delivered over $8.35. So a lot perhaps baked in, but perhaps not a lot. Not enough, I should say, baked into that target price. Maybe worth watching here. Let's look really quickly at a few others. Maybe Kohl's, they were at a $39.15. They're pricing in $2.13. In the past, they've moved $2.81. So maybe a little bit light on all the retailers, I should say. We shall see. Costco, one last one. They're at $281.14 coming into showtime. They were pricing in $9.95, and in the past they've delivered $9.30. So a little bit of the opposite story on Costco, a little bit rich perhaps there compared to past moves. If you like doing that analysis, as well as, of course, the earnings season analysis, unusual activity, all that good stuff, theoptionsinsider.com is the place to go. Speaking of places to go, let's go around the horn and see what everyone is watching this week. Let's start in Uncle Mike Land. Uncle Mike Land, aside from the number of coronavirus cases on our screen, which I'm sure we're all going to have a ticker for that pretty soon too. But what else are you watching these days, sir?
S&P 3000, I want to see if it can hold up above that by the end of the day today. This isn't really a market to watch by day. This is really a market to watch minute by minute to see what's happening with it. Also watching my beloved fruit company. Anything that can move like it did today, where 6% is no big deal to it. I want to continue to watch that, and that's what I'm watching for right now.
I'm assuming this sell-off in quotes because it's still very rich, obviously, but I'm assuming this little bit of a downturn of late in Apple hasn't caused you to reverse your opinion on the innovation index, sir.
None whatsoever. None at all.
It's kind of what I thought. I just wanted to get it out there for the masses who are maybe curious. Mr. Rock Lobster, same question for you, sir. What are you keeping an eye on this week, aside from the coronavirus count?
I'm a little bit glued to how the futures, the VIX futures are performing, if they're pricing a little bit more movement or not. And I thought last week was a pretty decent opportunity to I think long-term holdings, it was a good spot to scoop a little. I grabbed a little bit, but not very much. But as far as the market right now, I still think to be honest, I think it's early still. And I'm sitting kind of see how it plays out. Continue to look for the vol trades that have edge, and some of these stocks get, I think, really cheap. Then I'll buy some. But as of right now, it's like I think it's a good place to nibble, but not a great place to jump all in. That would be my thought. Yeah.
Maybe you nibble on the crust, but you don't really take a bite of that sandwich yet. You let it sit there and percolate a little bit to decide whether you want to take a full meaty bite. Speaking of meaty bites, that's our last meaty bite here of this epic meal, this palooza, this buffet that was the option block, listeners. But before we go, let me go back around the horn as I beam in here remotely from the CBOA Risk Management Conference. Hopefully I'll have some nice updates for you guys later this week on some of the interesting things on the cutting edge of all things volatility. But before we do that, back around the horn, Mr. Uncle Mike, we'll start with you, sir. If folks are intrigued, this may not be an Uncle Mike type market, but it certainly is a call Uncle Mike type of market. So if I feel like doing that, sir, where should I go? What should I do?
stcharleswealth.com. Feel free to reach out to me. My information's on my website. And I would love to have a conversation with you on what to do in markets like this, and when to stay away from them, and what I'm doing, and all that fun stuff. Give me a call.
All that fun stuff. Call Uncle Mike. Click on the Fox. All that good stuff. Trust me, you want someone in a market like this watching his screen so you don't have to. So you can go out and enjoy the world mask-free. Let Uncle Mike sit glued to the screens to free the freedom of Uncle Mike. That should be his new tagline. And Mr. Rock Lobster, if I want the freedom to perhaps join a volatility trading club in a time where, lo and behold, there actually is some volatility, where should I go? What should I do?
You can go to optionbit.com, go to memberships, and pick the vol trading club, and get your vol learning on. What the heck?
That's your tagline. Get your vol learning on. Who knew his vol club from Maine had a bit of a southern twinge to it? Get your vol learning on, y'all, over there at optionpit.com. Get the fancy MAGA hat, not the one you're thinking of, but the Option Pit MAGA hat, as well as, of course, learn the secret handshake and all the vol secrets. And maybe get access to the secret vol trading club headquarters, the clubhouse. It's pretty cool. I've been there. Optionpit.com is the place to go. And on behalf of the Rock Lobster and the Greasy Meatball who joined us there at the top of the show, and Uncle Mike, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in so many great questions. I know you have a lot of them. We're trying to parse them out. You get so many these days, trying to hit all the shows with all your various questions. But we'll get them answered, so keep them coming, and we'll see you back here later on in the week for OPR and a bunch of other shows, and then once back again here on Thursday for TWIFO, and once more for the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.